Business ownership is the best way to build wealth, and buying a business is the fastest way to get there. So let's talk about down payments. The Small Business Administration, SBA, guarantees a portion of your loan. Banks and finance companies offer these SBA loans, and they're also on a hook for a portion of that loan if it were to go bad. So the SBA requires a 10% down payment. But what's interesting is half of that down payment can be made by what is called a seller's note, where essentially the seller makes half of your down payment. So in these transactions, the seller would receive 95% of the proceeds up front and about 5% after you have paid off that government loan. One stipulation is the seller cannot receive any interest or payment until after that SBA loan is paid off. So any interest rate that you might negotiate with the seller would just accrue and be paid at the end of the term rather than as you go along. Now, it's pretty normal for the seller not to receive 100% of their funds up front. In a transaction, they have information as the seller that you don't have as the buyer. So it's pretty normal to see structures where there's something held back. There's things called earnouts, which we don't see too often in the spaces we're talking about. But a small seller's note is pretty common and really not unreasonable as a buyer to say, hey, will you at least give me this little portion that says that this business is still going to be successful for years to come, that you're leaving this in good shape for me? And for many of you, I'm sure you see, there are a lot of people on TikTok that talk about, 100% seller financing. It's definitely a thing. It can happen. Really anything can happen. These are all privately negotiated deals. Anything that you can come up with, you could make an offer to a seller. 100% financing is possible. The issue is it's really, really hard to find, almost impossible to find, because there are just so many buyers out there that can get cash, whether it's through the loans or through other vehicles, that most sellers probably aren't going to agree to it. Another factor to consider about the down payment is the 10% is the SBA's minimum. Banks can ask for more and often do if it's for a riskier industry or a business that they view higher risk. They might ask for more than 10% down. Now, I could foresee a time here where today you can get loans for most business types, most things that we would talk about here for that 10%. But maybe when lending standards get a little tighter, possibly next year, it's possible you could see those down payment requirements go up. You might see some variation among lenders. Maybe one lender will do a deal, but another one won't. So just keep that in mind, that it can be higher than 10% depending on what you're trying to acquire. So one good example of that is, I think for a long time I used to hear, I've never tried to buy a restaurant myself, but that they used to require higher down payments for the restaurant industry. It was 10 instead of 20. More recently, I've seen banks that have been doing it for 10. It's always possible they could go back up and require a higher down payment. Let us know if you have any businesses you want us to look at. Leave your questions in the comments and follow us for more.